Hello, everybody. Today wasn't a good day in the stock market, but it wasn't terrible either. And while we're running right smack dab into resistance, it's pretty improbable that we're going to reverse immediately here and make a straight shot back down to the August lows. So I would continue to expect more choppy, volatile trading, but we are now ready to go into September, which is historically and seasonally the absolute worst month for the market, going back to 1929 in the Dow Jones Industrial Average and the 1950 for the S&P 500 New York Stock Exchange. So it's an overall ugly, ugly period for the market. I wouldn't expect this time around to be any different, especially considering how we're going into September with August. And then never forget that then a week September normally means a week at least first half of October, where then you can set up for a possible bottom, and major important bottoms, by the way, happen in October. But this time around, I don't know. After 6 years of an uptrend, seems pretty hard to believe it would be that quick, but maybe it will be. I'm very open-minded. I'm willing to take it. More than happy to take it. But overall, while the market was reversing at recent resistance, nothing was terrible. NYSE volume was higher. According to Telechart, on NASDAQ it was lower. Not sure what IBD totals are, but I will check that out right after this video. But overall, we are running into some pretty key resistance, but we're not quite at the most important like reversal levels. Like for instance, to be a great shorting opportunity, I would like to see the Russell 2000 fail at its near death crossing 5200-day moving average. I would like to see the NASDAQ actually fail at either the 200 or 50-day moving average, so it's a little early here. Would like to see the S&P 500 fail closer to the 5200-day moving average, but we might not get that high, so that's why you're going to see me take some positions this evening, but we have some very tight stops, so it's not going to hurt us if we are wrong. But with the sell-off in the market today, it does look like that maybe we have, like I said on Friday, shot our load basically for the last week lows to last week highs, and we might need to retest those. But bottom line is, I don't think we're going to really zoom higher to new highs in a V-shaped straight formation. If anything, even if we do break out to new recent highs above the Friday highs, Thursday highs in the Dow Jones Industrial Average, and then the rest of the markets, I believe that we're going to eventually then run into resistance. But for now, all is well. Now, the most obvious thing to me today was oil stocks. I'm just going to run through, IEZ, UWTI, UCO, oil, USO, even gas oil, natural gas bull. Look at that volume the past 3 days. That definitely looks like it's bottoming. I like this pattern a lot, actually, for the natural gas. XES this time around, and IGE. So remember last time I was thinking that oil stocks were bottoming here back in late July, early August. It looks like maybe there was one more flush to get everybody who was for sure that they were bottoming then, because they probably thought it was bottoming here. Then you get a flush lower. It looks like it's bottoming again, and now you get another flush lower, and people finally throw in the towel and are like, forget it. Oil's going to $10. I find that very hard to believe. $20, $10 oil. Find that extremely hard to believe. So it looks like, I'm trying to find crude oil using the futures ticker symbol CL, but overall it looks like oil is bottoming. It's got some nice moves and some strong bottoms, so we'll see how that plays out. But this is definitely something to keep an eye out for, because oil stocks normally are good in weaker markets, and so that's not necessarily a great thing to see. But take that along with gold stocks looking like the gold looking like it's bottomed, and we have definitely a move into more defensive related industry groups out of growth stocks as we continue to sell off here. Now, there were a couple of stocks that, were interesting in my long scans. Flow, Some quality stock. Pocket Pivot Point Signal. It's a food stock. Once again, a defensive-related industry stock. But, it's Pocket Pivot Point Signal for those that are really itching to have to get long stocks here. Flow's a good candidate. USAP looks like it's bottom. Huge volume surge. Huge BOP surge to max green BOP after already surging to a strong green BOP level 2 days ago, building on that, and then culminating in today's session. But those 3 days, looks like USAP, a metals and mining stock, is putting in a bottom. Once again, a defensive-related sector, so, that's kind of telling us where the market's trying to shift its gears. And then even this evening, I was thinking this was a new long position. If this is an uptrending market, I still might do this long position just to see if I can't get it to get up to where it's been bought out at $66. But when I initially saw this stock, I thought it was an earnings winner. Even though it's a utility stock, I thought it was a major utility earnings winner, which should have been probably red flag number one for my brain as I'm scanning this market. A huge earnings winner in a utility stock? Yeah, highly unlikely, and it definitely was. As I go into research this name more, it's quite clear SO, the Southern Company, has bought out this stock for $66 a share. However, gas is only trading right now at 61, which means it has $5 of upside. But at the same time, let's say this thing goes through, well, it has $5 of upside. If it just wants to fill its gap, it's got at least $10 of downside. So that's a 2-to-1 risk to reward ratio. Not something I want to take for a buyout speculative position, especially in this downtrending market. However, it is a utility stock. Utility stocks do well in poor market environments like we have now. So gas might continue to move higher. But, you know, the only way that I think that I would have played this in this market is once again we go to our trusty 10 and 20-day moving averages. Only the 5-day moving average is touching price right now. The 10-day moving average is a decent ways away right here. And the 20-day moving average, even more important, is much further away. So gas, no longer a long candidate, but I tell you what, if this would have been an earnings victory, okay, let's say that gas, this move right here was due to earnings, and then I get this signal with a surge in green BOP and a surge in volume higher than the session before after it's consolidated in a tight pullback price range, I'm definitely going long gas if this was an earnings winner. But unfortunately, it's being bought out for $66 a share, $5 reward to a potential $10, $11 loss. Not my trade idea. Going to pass on gas. Another possible trade idea, EFOI. There are 22,000 shares short at Interactive Brokers, so it's definitely one that I will be watching in the morning if I wake up. If I can see it doing any kind of reversal whatsoever in the early morning, I'm normally awake for the first half hour to an hour of the session. I'll be looking to go short EFOI. You could always do it as an end-of-day basis short sell signal, using the 2365 level as your final buy stop. So if it hits 2366, you would be completely out of it. But going short stock still on an end-of-day basis isn't the way that I want to play this market. Instead, I want to use inverse ETFs. And on that note, we have a couple of signals. SDS and SH both showed up in my higher price stocks with heavy volume scan. It looks for stocks above that are over $20 per share, that trade over, I think it's at least 5 million shares a day, and SH and SDS both qualify for that as it trades. They both trade, I think, 5 million shares minimum, or else they wouldn't be in the scan, duh. But SDS is the more powerful of the two. It's double leverage. SPXU is the triple leverage, but it doesn't look as good as SDS. So I'm going to use SDS as my long signal, using the 2190 level as my final sell stop. This is a speculative add signal here, and it will only work if our market craters immediately. So this is expecting our market to sell off immediately. This signal, as you notice, it's not pocket pivot point signal. We don't have a huge surge in BOP, and we don't have a long base. It's more of a reactionary pullback and bounce, expecting the market to continue to crash. If it doesn't, we don't risk much. So 2190 is the final sell stop on SDS, 2.5% of my account capital. And then UGLD, excellent long signal here, but once again, it's kind of speculative. It made my price volume BOP scan. It was in my ETF scan, just taking out the 50-day moving average on heavier volume. BOP has increased to green BOP from 2 days ago, increased again on Friday session, and increased again today. That's excellent confirmation. 2.5% of my account capital, and because of that, I can split it up to my first sell stop at 885, and then I can be really brave and go back here and use these extreme lows if I want to of 805, if I want to really try to give gold some leeway. But no matter what, at least half of it will be out at 885, and if it breaks that, then the next low will probably end up being my final sell stop. And then also I want to add to BIS, 2.5% add, volume surge after a pullback on lower volume yesterday, kind of right at the 50-day moving average support, bouncing. BOP isn't rising, but it's still green, above average volume. If we're wrong, a move below 29.59, and I will be out of this add position. But 2.5 BIS, 2.5 SDS, 2.5 UGLD.